Hello traders, I hope you guys doing well. Let's take a look at what happened with the Kiwi dollar. Yesterday we had an interesting breakout around midnight London time, but today, around 12 hours later, the price is pretty much back where it started. So what actually happened with price? Well, let's take a look at this. This is a daily chart, and you can see that the price at one point was down at 66.68. So we had that significant breakdown. However, though, you can see it went really quick, and this is just a 5-minute chart, and you can see how the price was literally trading at 67.72 and then it was trading at 66.95. That's a significant move, and if you even look at the 1-minute chart, you can see how the collapse happened really quickly. So I think in general it was quite difficult to actually get a fill here. This was almost a gap, and I think if you had a limit order there, you probably would have get a quite significant slippage. Now what happened here though is that the market then moved to the upside. And why did that happen? Well, let me let you on a bit of a tip here. Most of the breakouts in the Asian session don't work out. That's why when I looked at this yesterday and I saw this live, I was very tempted to short on the pullback. However, I know that most of the breakout don't really work out in the Asian session. I know this firsthand, trading Australian and New Zealand economic data reports over the last few years. So what I like to do is I like to wait for the European session to open and then potentially take a position if things look good. So what happened at the end though is that inflation failed to improve investors. Inflation was at 1.9% year on year, and the new inflation reading is at 1.5%, so lower than the 1.7% projected by the markets. What's gonna most likely happen now, according to the experts on macroeconomics, is that the New Zealand Central Bank could potentially cut interest rates in May and once again in August. In fact, in August, it's fully priced in now that the central bank is going to cut interest rates. Now, why is this market not trading much substantially lower then? Well, because people are focusing on other things. They're focusing on higher stock markets, they're focusing on China-US trade deal, and they're focusing on the fact that Chinese economic GDP and industrial production overnight was much better than expected. That is lifting things, and particularly the Australian dollar. Here, though, technically, and also the domestic economy in New Zealand is not looking that good. So I would still keep my eye on the New Zealand dollar pair over the next few days and weeks, because we're stuck within this rectangle, right? The difference between the low and the high here on this daily chart is 225 pip. So if we do have a daily close below 67.15, we may actually see the price trade lower to something like 64.92. So from a risk-reward ratio perspective, depending on how the daily candle looks like at the time, if we would potentially have a short entry just below this level here, and the stop loss, for example, would go at today's open price, then you're looking at a risk-reward ratio of 4 times the money, which is actually a really good risk-reward ratio. So stay tuned on the chart here. Things may change over the next few days, and if we have a close below this level here at 67.13, we may potentially see New Zealand dollar weakening over a period of a few days up to a few weeks, and then potentially reach 64.89. Thanks so much for watching, and don't forget to subscribe to these videos. Thank you.